there's a lot. We saw a lot of price action in recent weeks, and yesterday as well. So I think the market's taking stock a little bit at the moment. We need to see sort of proof of concept in rolling out this program. We talk about it perhaps as early as next week. They have stolen a march a little bit on getting this out. But it remains to be seen how that rollout progresses. We know there's logistical challenges in getting that out. Nonetheless, it's fantastic news, and you're seeing that in some of the individual names and the performance this morning.
Yeah, it's interesting. There is a view in the market, of course, that we've pulled forward already a lot of the positivity around these vaccines and the reflation, and that reflected the gains we saw in November. Do you think there's any possibility that actually these gains through November represent a peak of sorts in this cycle for the market, and we won't get a repetition of those outsized gains going forward?
Well, November was, exceptional performance on the news that we had on successive Mondays, different weeks through the month. So those kind of gains, those kind of monthly gains are going to be hard to come by. But I mean, really, this could just be the start in a way, particularly with the UK having more of a sort of cyclical and value bias, and that's been beaten up for a long time. So, if this recovery sort of takes hold, if it's more of a sustained, pickup in business activity globally, the UK faces challenges, domestically, but certainly on a global basis, and for the large cap names, this could just be the start, and it could be, the start of a decent sort of rebound.
Alex, in your copy, you say, and just following on from your initial questions with Jeff about the FTSE, the UK market has a value bias and UK assets remain cheap. And yet when I look at all the stocks that are trading at a forward PE multiple, perhaps discount to the broader market and a discount to perhaps some of their US peers, I can construct a very good argument why all of those stocks are trading at a discount, from the energy sector to some of the other cyclicals as well. Is it cheap, or is it just the fact that we just don't know enough about the world economy to buy these stocks?
I think it's a combination of things, not least Brexit and the relative cheapness of the market versus peers and other global indices. But Brexit has weighed on UK for literally since the end of June 2016 in terms of valuations, and you've seen the market cheapen up a lot since then. And it's not just in equities; it's across different sectors as well. So I think it's a combination, but nonetheless, the market is attractive to long-term investors, and I think if you can stomach some volatility and risk in the portfolio, then if you can tuck some away, then it's a fantastic opportunity for some long-term returns.